Hi, welcome to Dumb Money Now. Are you thinking of investing in the stock market? Is it your first time purchasing a security or an equity in a company? Don't know where to start? Well, you have come to the right place. In this video, we're going to talk about the basic fundamentals of purchasing a stock, type of stock investment strategies, and finally, how to pick the right stock. My name is Islamuddin Noor, and I'll be your host through this guide. Let's get right to it. There are a few basic fundamentals when purchasing stocks, which are also referred as securities or equities. Number one, brokerage account. This is going to be the platform or a broker where you're going to buy and sell the stocks. We will go through a few examples here. Number two, types of stock investment. This varies depending on type of investment strategy, which then depends on age, risk tolerance, income, and other factors. Number three, type of stock portfolio management. We will discuss this later in the video. Okay, let's jump into brokerage accounts. When it comes to brokerage accounts, you can pretty much pick anything you like. They're all almost zero commission fee trades. It's kind of weird now that it's normal not to pay any commission fee, but it wasn't too long ago when brokerage firms used to charge lofty charges to buy and sell stocks. That being said, my first pick for you would be Robinhood. It was Robinhood which made this zero commission trading the norm. It's very beginner friendly with very clean user interface. You can use the link in the description to get your free stock now. Your other option would be WeBull. WeBull has more technical functionalities when analyzing the stock, but comes with the cost of being a little complex. You can claim 2 free stocks by using the link below. And lastly, TDAmeritrade. This comes with more robust free trading platform known as ThinkorSwim, where you can trade stocks with real-time codes. I suggest to stick with Robinhood until you get some exposure and experience trading stocks, and then when you get comfortable and decide you want to jump more into world of trading more frequently, this is the best free platform I recommend. Please note, the golden rule is less frequently you trade, the less chances of you losing money. We talk about this more in other videos, so make sure you subscribe and turn on the notification bell so you get notified when there is new content available. Okay, now that's out of the way, let's get to the good stuff. Types of stock investments. As I mentioned earlier, this directly relates to individuals, strategy, age, etc. when investing in stocks. Here we will go through a few important examples. Number one, growth stocks. These are type of companies with disruptive products and or services where they grow rapidly by exceptional management team and its execution. If caught early, these companies can make you a fortune. Few such companies are Tesla, Netflix, Amazon, Apple, and so on. I assume you all know these companies. Let's take an example of online shopping and cloud giant Amazon when it was not one of the biggest public companies listed on New York Stock Exchange. If you would have invested $10,000 in Amazon a decade ago back into 2010, your return on this investment today would be worth, wait for it, a whopping $250,000. In the same time period, the same amount, if invested in S&P 500 index fund, which tracks the top 500 companies in the US public market, would be around $29,000. So clearly, picking individual stocks has its perks. Let's return to our classroom now and take a look at the second category of stocks, which is dividend stocks. These are the companies which pay you some amount of money for holding their shares. This passive income paychecks could be monthly, quarterly, or annually, depending on the company. What do I mean by that? Let's take a look at an example. In this example, we're looking at Stag Industrial, a real estate investment trust company, also known as REIT, based out in Boston, Massachusetts. Since they are a real estate company, they own many warehouses across the nation. And one of their many tenants is our previous example company, Amazon, which rent warehouses from Stag Industrial for their shipping and logistic purposes for their products. So now when they collect rent from Amazon, they share a piece of that rent with you every month as dividends. The amount of dividend you get paid depends on the something called dividend yield, which currently at time of this video for Stag Industrial is 4.74% annually. If you want to learn more about dividend investing, be sure to check out our other videos on the topic. Our last type of stock in this area is value stocks. For this example, let's say you go to your local grocery store for some shopping. When you are in the supermarket, you notice the tomato prices are cheaper than what you usually pay for them. It sure is a great feeling to find a value. This cheaper price could be for any reason. Maybe the store ordered too much and people aren't buying as much tomatoes, so they have to get rid of it before it goes bad. But one thing is certain, these are unique situations and rates usually go back to its normal prices. In the stock market, you can find value when shopping for companies. The most recent example back in March 2020 when the global economy shut down due to the novel virus causing global pandemic. Everything was on sale due to fear and uncertainty in the market. It doesn't mean there have to be these disastrous events to find value in the stock market. There is always value in the market, just to know where to look. But just like tomatoes going bad, there are situations that make companies go on sale. For example, right now, because of the virus, the demand for outdoors and travel has dropped to its lowest levels. So there are certainly value to be found in these sectors. How to determine which company is cheap or expensive when investing in it? That's a topic for another video. If you're enjoying this video so far, please make sure to drop a like, which helps the YouTube algorithm and the content reaches to more people. Okay, let's get into our next topic. Types of stock portfolio management. In the scope of this video, we are only looking at active portfolio management and passive portfolio management, and I'll keep it very simple to understand. Active portfolio management is what it sounds like. Actively managed portfolio of stocks. This means you can manage buy and sell orders anywhere on your phone through your favorite brokerage platforms. There are also actively managed exchange-traded funds, also known as ETFs, which is managed by professional fund managers. One example is ARK Investment, where they invest in disruptive technologies and sectors, and they're very good at it. Their performance on their main fund year to date, so far in this year, is a staggering 124%. And in the past 5 years, the rate of return has been 41%. If you compare this to S&P 500, which is usually on average about 10%. Which brings us to passive portfolio management. This simply means buying an index fund like S&P 500 and forgetting about it. There is an S&P committee that decides which companies are included and excluded in this fund on quarterly basis. Okay, now, before you go start buying companies, we need to talk about how to pick the right stocks. When it comes to picking individual stocks, there is some homework required. That is companies' financial health and debt load, which we can understand more by looking at companies' balance sheet, income statement, and cash flow statement. Do you have to be finance and accounting expert to understand? No, not really. Some other factors to look at are companies' valuation to determine whether you're paying more, less, or fair value. That is price to earning ratio, price to sales ratio, and other factors. Please be sure to check out other videos for in-depth explanation for each of these metrics. I hope you got some value out of this video. Please support the channel by hitting the subscribe and like button. Disclosure, I only own shares of Tesla of all mentioned companies in the video.